Boom.
That was fucking slick.
Well, we're live.
I like it.
Let's see. Yeah, good to go. Cool. Well, thank you guys obviously for hopping on. So, the reason that we're able to get these, these herbs, these three guys from the Steam Room finally together in public is the launch of STEAMROOMtrading.com, our brand new website and this whole new structure that we kind of put into play. All of the educational courses that we have are now in one place on one site for the first time ever. And we've even broken our master course down into individual courses to start focusing a bit more on singular areas of trading. So we have Ronch's Precision Option course. We have Jay's Flow Trading course. We have the Trading Psychology course with Chris Cady and Charlie Bathgate. And for the first time ever, we have Lucci's tape reading course all by itself as an individual. And on top of that, if you want the bundle offering, we also have our master course, which is all of that together. If you really want to, jumpstart your trading, and that comes with, 3 months free of the Steam Room. Our goal really has always been to, level you guys up, give you new skill sets, teach you what we know to make you better traders, and hopefully may have you make better decisions inside of the markets. So if you're interested in trying out, some of these education courses, you can go over to our website, steamroomtrading.com/education, and you can save 30% across the board until Monday of next week. So check it out, and thank you guys for joining in. So with that being said, I'm going to stop yapping here, and I wanted to kind of pose to you guys before we roll into the Q&A. We kind of had a pretty crazy session today, so I wanted to know if what you guys think. Start chatting about it a little bit.
Yeah, I mean, we've had movement. It's been pretty crazy for what now? A good couple of weeks, right? It's been a little been different, I guess you could say.
Define crazy.
More volatility. More.
Honestly, I think this whole game has changed, and I was late to figure it out. This is the most program trading that I've seen, mostly centered around the indexes, of course.
Yeah.
That I've ever seen. Consistently, day to day, week to week, month. If you look at most stocks today, they didn't do anything. We had a gap up, and then it was range back, but we didn't do anything. Most names just didn't do anything. And but in the middle of the day, through all these swings and this wild, these wild ranges, the emotions pile up on both sides, and they shake people out both sides. And it's the most program activity I've ever seen, and that's just intraday, when really we're not doing anything. So I've shifted towards a lot more SPX and ES trading, because I feel like that's where the game is. If you tried to trade PLTR or a bank today, I highly doubt you could have made money. Maybe one or two little places here and there, but there's no game there. There really is no game. And a couple of years ago, you could take a single name and you could really, make a move in it. Ronchero, am I wrong on this assessment?
No, you're not wrong. And I spent most of today, I've tried different types of trades, applying some different strategy to what I think the market is giving me. And some of it has been good, and some of it I haven't been able to figure out, which is why I spent the majority of the day today talking to you about how you're going about trading and scalping SPX, and taking what you've kind of, have figured out and seeing if I can apply it to what I already use. Cause I can't scalp in and out all day. I'm not good at it. What I can do is get the extremes of ranges and then find a spot where I can get some probability for having some success. But I can't be in and out all day like some of the guys in our room. I don't do that very well.
Well, you and I both used to aggressively intraday scalp trade with some really big size too.
Yes.
And I have pulled back on that completely, almost completely.
Yep.
Because even you look at Tesla, and this shit is program trading too. Ridiculous gap up. And then when it sells, it'll sell 10, 15 points at a clip. And then yesterday's activity at the last 10 minutes, Jesus, you saw that? Last 20 minutes on Tesla?
Yeah.
Like 15 points.
Yeah.
You know?
Crazy rip.
And they'll do this stuff through program activity, and it's like it's wild. It's frustrating at the same time because we're guys who used to scrape out a lot of intraday scalps, and now we can't find the edge there anymore. And that's why I've shifted over to a little bit towards SPX and ESP. Obviously, if you have a big, swing day, so to speak, where you could just buy anything or short anything and make money. But those days now only come around maybe 1 out of 30 days, 1 out of 20 days.
Yeah. And I think, though, I mean, usually this is what follows what we've been seeing. You had a period in this market, pretty lengthy period, where there hasn't been a legitimate correction. You know what I mean? Hasn't been that real pullback. Probably going back to at least that 2023 little pullback we saw. But you can make the argument even that wasn't one of those true corrections where you get a healthy washout, right? Like Ronchero, how long have we been saying, oh, we could use a real healthy washout here,
Yeah, we just don't get it.
Right, exactly. So I think the lack of that, the longer you go, the longer period of time, the longer the further in the trend goes without that, you run into this, and where you get this tug of war type of price action with bulls and bears, and like Lucci saying, the programs always rule at the end of the day, because they're faster and they're pushing more weight. But I just think this is a form of kind of a breather consolidation. Maybe it leads to more correction than what we're seeing. But I think that's the noticeable difference here, is that this is a digestive period here. This is not necessarily a risk-on period like we were seeing.
Right,
Correct.
right. And then we're littered with gap downs and random gap ups. And that causes even more confusion. And then you have programs running to certain levels all day. Meanwhile, you're looking for action intraday and you can't get it. Do you know how many times I had to short PLTR? Can I tell you how many times I had to short PLTR just to make money? I, of course, didn't make the money back that I lost, like trading it. I started shorting it at $70 on the way up. And every time I thought I had it, it would clip me 10 points. It would go to $80. And then finally, one random day, it shot through $70 and I finally got paid. Now, it was literally only one day, though. One day of clean selling. So just like you were saying, like even the selling that we're seeing, it ain't clean. It ain't clean. This ain't the selling of a weak market or anything like that.
No, it's not like bear shorts are cleaning up here by no means.
No, not at all. And you have to be swing short, and you got to have balls of steel to sit through all this, these ranges here, and just to sit through this tape. So it's not easy here. So even in this distribution period, it's not like you're walking into money here on the short side either.
Yeah, and I think that's where a lot of traders, myself included, I'm just faster to recognize when whatever it is that I'm doing stops working. That's the same thing as saying, you can't go to the market with a strategy and say, hey, here's my strategy. The market doesn't care. Like, you've got to look at the market and say, what strategy is appropriate for the current conditions? And to your point, the current conditions have been better for guys that are trading SPX and futures trading. Like the other trades that I like to participate in have been just okay, and they've had okay results. Like, I'm using more condors right now than I am anything else, but that's where I got to go to get paid right now.
Yeah, and that's listen. I mean, I think that's the problem. A lot of players in this game in general face. We've all been down that road and continue to do the same thing, even though we are well aware of it. Is that climates, environments change. Sometimes the old fat pitch theme, right? Sometimes the environment's suited for your style, and that's where you got to pick up the money, and then you got to be able to realize when that changes, and either you have a playbook for that environment or you got to sit on your hands and wait, because you can't trade the same way in every type of market. It's just impossible, you know?
Yeah.
So you either learn the right way or the hard way. A lot of us initially learned the rough way to get it across our thick skulls, but you got to realize that. And look at what, I think that was the crazy part of this market, though. If you look at the stages that we've had, right? Because I can relate totally, because I'm really one type of player. Like, I would say my bread and butter is one style, but initially you had where all these $500,000, $700,000 stocks were just ripping, right? Every day you'd come in, you see Nvidia up, Avgo up, Google up, right? And I think to Lucci's point, in that market, all you had to do at the open was kind of get in the middle of that buying, that program buying off the open, and scalp those names. Yep. You know what I mean? And get a healthy move out of it. And that lasted for a while. But then, you know, as we came out of the summer, it started to change, where now you started to see the underbelly of the market, right? The Shopifys, the Carvanas, even trickling down to some of the smaller, cheaper price names. That was where the momentum was at. And if you were chasing, you know, the $1,000 stocks, if you were chasing, you know, up 2 days in a row, you kind of would bump your head on the wall, because it didn't work anymore. You understand that the environment changed. Now, some of the mid caps, smaller caps were where the hot momentum was at. That was the summer all the way up into the end of the year. And now I think this is kind of the next stage here, where if you're long anything, you kind of, it's root canal.
I'm waiting for the summer of Lucci, bro. When is the summer of Lucci?
Wait, say it again. You're waiting for the what?
The summer of Lucci. You remember the Seinfeld episode?
Yeah. That's what I thought you said. Well, you're talking about, you want apocalyptic margin call.
Dude, why do you always call me out like that? I don't want apocalypse.
What do you want?
Okay?
You explain. Let me hear what you want.
You know, if I want apocalypse, I'll just call you. And you know,
what's the Lucci time? Explain to me your ideal climate. Go ahead.
Panic. It's 100% panic. It's not apocalyptic. It's
right.
It's
panic,
it's
misery.
Panic, you know. And remember,
goals.
I'm into reading emotions on tape. Okay, and now there's many points in time where, for example, things get overblown, and you get these blow off tops. You know, for example, what did we have? The nuclear names, the
quantum stocks, right?
Yeah, the quantum stocks and things like that. And you know, there's a lot of tape to be read. Small cap, I feel like tape reading in small caps right now is a really high probability strategy as well, because again, a lot of those small cap names are not moved by the programs of the market. They have nothing to do with the programs of the market. You know, so I want to be able to read the emotion on the tape. And when you have program filled activity, you know, you get a lot less of that. You get a lot less of that, you know. And I would imagine Ronchero too, for some of your swing names, you know, you've started to do more iron condors, I would say, than leaning into winners on the long side, like your Costco's and things like that.
There's nothing to lean into right now.
There's nothing to lean into, exactly. And then leaning into something on the short side, it's a way different conversation. It's a much different conversation than it is on the long side. So, you know, Jesus, to answer your question, like, you know, just a little bit of selling, man. That's it.
No, I hear you. That's, you know, I think the Fed getting involved took that kind of out of the equation here for the most part. We, you know, as far as I can remember, and times change, I guess, you know, so over the years, but every 3 to, I would say, 6 months on an average, there used to be a healthy pullback in the market where if you were long, you would shit yourself. You know what I mean? You were unsure whether you should hang on or bail, because you thought the end of the world was coming.
And we haven't seen that yet. We haven't even seen a pull like that. No. And you know what else I realized? There's a whole decade's worth, or maybe even more, of new traders that have never seen what that looks like.
Bro,
Yeah.
I
They've
see.
never
Yo,
seen what
I
it
see
looks
this
like.
on social media. These traders who started post 2008, and they're talking about consistency, and I'm like, guy, you have no idea you have no idea what a bear market looks like. You know?
Exactly. So it's amazing how much. I mean, even during COVID and all these kind of other things that have happened, it's amazing how they've been, how they've been able to hold it up here. But again, we all have to adapt. And my point of, of accepting the writing on the wall has been recently, where I've moved now towards more futures and SPX 0DTEs. Less writing, much less writing. I mean, writing options I used to do for years in a row,
Yeah, you
and
used to
I
do that
used
a
to
lot.
print money, man. Now you literally have to scalp in and out of your rights, man. You can't hold on to that shit.
It's so true.
And it's a whole different world. So you gotta adapt. You gotta adapt. So that's what I'm doing.
Yeah. So on that note, Lucci, we had a question come in that kind of plays a little bit off of what you said. Someone had asked that they're looking into the funded account space and are interested in changing futures. You know, they're asking like, how would they go about that? Like, what's your suggestion if they're starting out?
And you're saying trading futures, or you said
trading futures, but like through like the prop accounts, like to learn some discipline and whatnot.
Yeah, I mean, again, the cool thing about some of the sim trading, and I've been against it. I've been against it for a decent period of time, only because a lot of them do a lot of shady things. So the number one thing before even talking about trading is to really do your research on the funded sim that you're trading. That really has to be number one. And I don't mean freaking Googling it and then going on, Instagram or whatever and seeing what other people are saying about that shit. I mean, really trying to figure out who's in charge of this stuff, who are their counterparties, what systems do they work off of. A lot of these folks, they'll work off of, let's say, a MetaTrader, or they'll work on products called CFDs. These CFDs are literally thin air. They're not actual. It's not the actual futures product. So you're not actually trading what you fucking think you're trading. And they just give you a sim where, believe it or not, and it sounds crazy, they can manipulate the tape that you're looking at. That's number one. They can manipulate entries and exits and change whatever the hell they want. That's number two. And again, and three, they can decide at any moment whether to pay you out or not, because remember what they have to fight against. They have to fight against bots. They have to fight against predatory traders who set up 9 different accounts and have them pitted against each other. One will go long, the other one will go short, blah, 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 all this kind of stuff. And all these more sophisticated strategies as well. So that's the first thing. First thing is first. Go with a reputable group that has paid out people that okay, that doesn't have any, bad reviews on it or things like that. Go with that first, right? Because if you find a group that just started, let's say, or some influencer on social media now is backing something and you want to check it out, all that shit is a problem. It is a problem, and it makes everything look bad. It makes us even look bad. Because y'all come to us and you're like, all right, I tried to trade futures and it was bullshit. Like, dude, it's not. Futures is the backbone of society here. We use these products to hedge everything. You know what I mean? If without these products, we'd have a lot more problems. Okay, so that's step number one. Step number two, you got to find the right strategy, because the parameters in which they have you working off of is you can't lose a lot, and you're not, at the same time, you're not going to be able to risk that much to make a lot. Okay. So let me give you an example, right? Let's say you walk into a sim and they're like, okay, we'll give you a $50,000 account, whatever it is. And they'll say, okay, your max loss is $2,500 and then your max profit $5,000, right? Well, your lot size is going to be a big issue there, because if all of a sudden you take a 10 lot on ES, the big boy, your every tick is what? Every tick is going to be $250, I believe, right? So 25 per tick. Right, so that's exactly, and then 4 ticks per point on ES. You're fluctuating $1,000 here. Your P&L is going to be all over the place, and you're going to blow out the loss limit pretty quick. So in that, it sort of creates a little bit of discipline where you can't get crazy enough to blow yourself out, but you also can't get too heavy on these winners in case these things roll back around. So you really have to work within the structure of their rules and everything. And unfortunately, a lot of traders don't know how to do that because, you know, you want to run and gun, you see something that you like, you want to put the whole damn account in it. They won't deny you that possibility either, because remember, they're designed to want to scrape the membership. That's how these systems exist, right? Without the membership money coming in, there's no money to pay the people who actually make money, which is a very small percentage, and that's in trading in general. There's no money to pay costs. There's no money to pay data. There's no money to pay any of this shit. So they have to balance this stuff pretty well. And a lot of sims don't know how to do this shit. And that's why they blow out. And then you see them running away with everybody's money because they can't pay anybody out. So these are some of the problems here. So to recommend starting out, do some research and then start really, really small. Understand what kind of strategies you need to use to try to pull off, a couple of ES points a day kind of thing. That way you can get some things going. But it's tough. It's very tough.
Yeah, and I think the important thing that you kind of said too is understanding what your account size is and managing the risk associated with that, right? Like, don't blow out so quick. I mean, the good thing about a lot of the prop counts is at least you have to learn how to do some risk if you are going to take like a thing like you kind of suggested there.
Sure.
So switching gears a little bit, Ronch, this is the first question we got. I want to make sure we get to it from Anthony. It's for you. Of all the stocks on your watch list coming into a technical level, can you talk about picking worthy ones to focus on and establishing a reasonable targets?
Everything comes back to what's your time frame, right? So it all comes back to, you want this trade as a long-term trade? And for me, as an options trader, a long-term trade is 12 months, right? So is it quality? Is it quality at a discount? We have a formula for, you know what I mean, or a recipe, for lack of a better word. And we need these things to come together to be able to make a decision as to what it is that, that we like. I mean, I can give you a list of names that I like, that I want to be, that I want to own, that I want to be in, but they're, that recipe just isn't ready yet, right? Like, look at an ASML or an MPWR. Like, semis are out of favor right now. They'll come back eventually, but I can't do anything with that. Look at like Illumina. Illumina is a trade that I'm currently in, and it's quality to discount. It's been through its gyration, and the price movement on it is still very wild. So if you don't have good entries and the things that you look for, you can make a mess out of things rapidly. So yeah, there's a ton of stuff out there, but there's a ton of stuff that's not ready to be, picked up yet. And again, time frame. What's your time frame? What are you looking for? You want a long-term trade, short-term trade, a scalp, a swing? You gotta figure that out as well.
Yeah, so without giving away like all the secret sauce of the course that you teach, right? Precision options. What are the technicals that you mostly are looking for? Like, I know time frame is important, but if you're going a little bit more overarching on some of the names that you're talking about, like, what are you actually looking for? But like, you have your 200 days, moving average. You have, I know you use anchored VWAPs. What are the ones that you're really looking for before you can say, hey, this is a name I have interest in?
Yeah, I mean, just think of it in terms of concentric circles. And what do I mean by that? Well, start with the daily chart. Can you identify what kind of a trend, whatever particular name you're looking at is in? Is it an uptrend? Is it a downtrend? Is it moving sideways? And the way some of the best and easiest way to look at it, quite simply, is where is the 200-day moving average? And why is the 200-day moving average SMA? Why is it important? Well, typically, that's where big banks and institutions either decide to get involved to the long side or the short side, or they abandon their positions if something can't hold up at the 200-day moving average. So that's kind of where everything starts. That's kind of the ideal big picture indicator to look at, is where is price in relation to the 200? Is the 200 in an upward direction, a downward direction? And is price above it or below it? That's the most simple and basic way to take a look and evaluate it.
Yeah, and those are all things that you teach, right, in your course. So like position sizing, understanding time frames, how do you look, you use the technicals, and then you dive in more into
You go
those
into a lot
strategies.
more detail, right? Like it's
Yeah.
like I said, what's the primary trend? Are you what's your time frame in the trade? So if your trade is now shorter term, for example, we were talking about that with SPY today, right? Like SPY is technically still in a longer term uptrend. It is in a period of consolidation. It's chopping, and can it pull back? Well, where's the 200-day moving average? It's all the way down at 554. So if you went to 554 and it's stuck, you'd still technically be in an uptrend. But short term, it's disgusting, right? Like you've got a declining 5-day moving average on a 30-minute chart, a 15-minute chart. That says to me any bounces intraday have very low probability of success. And that ties right back to what Lucci and I and Jay were talking about this morning, which is how do you use the SPX and some of these other tools that we have to decide if you have a trade and on what time frame? And that's to me where it all comes back to. People say, oh, you're a leap trader, you're a condor trader. It's like, no, I'm looking at all of these different things to see what can I use to make money and what time frame do I need to use it in. And to Lucci's point, there's a lot of machine stuff going on out here, and I'm trying to tie together what he's looking at with what I've used over the last, 150 years. So
right. Me too. I'm trying to take what I already know and adapt it to some other stuff, because what I've been doing for the longest time, it ain't working. And it's time to pivot.
Right.
So off of all that, I mean, the one thing that I'm kind of getting from both of you too is, obviously we're talking about time frame, but today there was a lot of scalping opportunities to go through on the SPX side, which changes completely what you're going to do, with your stuff that you do, Ronch. Like you're looking 30, 60 days out on a lot of stuff when it comes to swings. You're doing leaps, which are further out. A day like today is like, yeah, I'm going to trade what I'm seeing, and I'm going to use the tools that I have, and that's why the time frame, is super important to what you're actually doing.
Yep. And before I jump back in on something like what Lucci's doing with SPX is because, I don't know how many, weeks or months down the road he is in his observations and his trial and error and what he has put on his dashboard as being important to his trades throughout the course of the day. I'm catching up to that. So until I get caught up and have a better handle on it, I can't go at the same speed that he's driving at. Does that make sense? Like I got to catch up before I can drive that speed. So today for me, or yesterday, you had the meter, our internal meter at 40. Anytime it has dipped that low or gotten into the 30s, low 40, high 30s, I've been running my mouth for a long time about how accurate that is. And yesterday when the meter was at 40, I bought SPY 575s 30 days out just to give myself some mental cushion. And I blew out of them this morning. I mean, that was a 10-point run. That's a good trade for me. I don't need to go in and scalp 8 times during the course of the day if I have a morning like that.
Right. So, but before I go to the next question, I have to point this out, Ronch. I saw you using this, your bear claw. You got it? Yeah, you do got it. Everyone else is going to be wondering what the hell this shit is. But anyways, for those that don't know, I got Ronch hooked on a back scratcher for all the calls, and I sit here and fidget with it so much. But anyways, so switching gears to a little bit more of what it looks like a macro question. Kevin G asked, despite PPI's numbers being negative, we saw a gap up reaction, was thinking the negative news is good news for the market, but was frustrated by the lack of continuation. Is bad news bad now, or is bad news good now? I think, Jay, this is kind of speaking to a lot of what you do on the Flow show.
Yeah, I mean, good luck trying to figure that. That changes day to day, week to week. Again, the reaction is more important than the observation anyway, but I think the problem with the current market and what we're dealing with here is you could see a different reaction on each and every different day. And that's what, listen, no matter how you slice and dice it, no matter what you come up with, there are going to be periods in time in this game that are difficult. It's just tough. It's hard-earned money. You know what I mean? You're going to make some money. You're going to give it back. You're going to make some money. It's just, there's not easy money out there. And that's okay. The best thing, I mean, especially if you're newer to the game and you're not familiar with certain other things like trading the indexes and futures, is probably to sit on your hands and do nothing, because more than likely you're probably just going to be trying to chase break even while you're in this period of time, you know?
Yeah, or rack up losses. Yeah.
It doesn't. The beauty of this game is nothing lasts forever. You know, trust me, I got degenerate blood just like everybody out there. But you have to wait for your time. That's one thing. At least that's something I strongly believe in this game, is that you have to have the ability to sit around and wait for your time to pick up the money. Again, I'm not even talking about fat pitch time or sweet spot time, but there are times where it's a little bit easier to make money, especially on the long side of the market. And there are times where it's really, really difficult. And I think right now, just again, without going into the details, we've been talking about the last few webinars on the Thursday one, the Sunday one for members. There's just certain dynamics that are at play right now that make this a really difficult setup, almost like a tug of war type setup where bulls and bears are fighting, but can't find any strong momentum on either side. And unless, you know, kind of to Ronchero's point, unless you're Lucci or Sill in the room, or, you know, a few select guys who like to trade these ranges and are quick enough, you know, you just got to get used to something like that, you know. But nothing lasts forever, and you want to be around with bullets to fire when the tide does turn, right? So that's kind of how I look at things here. You don't want to get to answer the question regarding the PPI. You don't want to get too wrapped up in the macro story, okay? And because like you had a perfect example in our 2022 little bear market we went through, okay? Everybody and their mother basically was guaranteeing we were going to go into a recession. We never seen the Fed hike rates at this type of pace ever before in our lives. It's almost a guarantee, right? Each and every one of us felt that way, okay? And what happened? The total and complete opposite happened, you know? So everybody who was paying attention to the macro fell in love with handicapping the macro. They missed out on what was a pretty strong bull market, and an opportunity to make some good money, right? So that's one thing you shouldn't do, in my opinion, is get too wrapped up in the macro story of things, right? There's a lot smarter people out there, a lot smarter than us anyhow, that they can't even figure out this shit. So don't even hurt your brain. Again, that's not probably the answer he wants to hear, but I think right now it's just too difficult for us to try to figure out and handicap on the macro side.
Yeah, so if let's expand just a little bit on that, Jay. So not necessarily on the macro, but you're saying like don't get caught up in that noise. So what are you looking for, right? Like I know that everyone looks at you that you're the flow guy, right? Options flow, but it's a lot more than that. You're always looking at sentiment and positioning and Sharpies and all that fun stuff. So like what are you actually looking for you to kind of get a read on where the market's going to go?
Yeah, I mean it's basically like you just mentioned, there are a few different things, but they all fall under the same umbrella, right? I mean, it starts with the flow for me. And if you just pay attention to the flow, you probably got answers to all the other questions regarding all the other things you just mentioned as well, right? Like, because things were just so bullish and there's that much more participation from more players out there, especially on the retail side, you know, things get over-owned. You see names like NVIDIA and Tesla that if you saw a $500,000 or $1 million sweep once every couple of weeks, it was noteworthy. You had an edge there. Now you see $1 million sweeps every 2 minutes and they mean nothing, you know? So you get to a point where things get so oversaturated that you lose the edge out of that information, you know? And it gets messy when we're not seeing new aggressive buying in new names. That's usually an early sign of caution that the risk appetite in the market's starting to wane, right? When we start seeing the same names continue to catch the active and aggressive flow, that's usually a sign that things are getting overheated and the risk appetite's starting to dry out a bit. So that being said, you can extrapolate that information into the other things you mentioned on the positioning side, right? Then you look at positioning sentiment. You could see people are a little too bullish, right? You had a lot of retail participation. We know the market loves to catch positioning offsides, right? I mean, that's what the market feeds off of. So when you get to these extremes, these are signals you want to pay attention to try to avoid getting caught on the wrong side with a basket of names, right? See, that was my problem, Joe. Everybody has a different problem. My main issue, my hurdle throughout my career in this game was not making money in a bull market, because as you guys know, I'm long only, right? So I never had an issue of trying to short a bull market because I don't short, right? So I had no issue making money in a bull market. That was fine. I make money. Sometimes I get a little luckier. I make more money than the other guy. That's irrelevant. My problem was I would get caught every time that bull run ran out of gas. That first pullback, I would get caught with a basket of names and give every effing thing back. Just one little pullback, I give back that whole rally, just like that. Not only that, not only give back the profit, sometimes go into the red where you want to jump out the window, you know? So I had to find something, some sort of reminder, some sort of signal to tell me, okay, listen, there may be more upside left, but you got to start now paying attention to the risk you have out there. You understand? If you want to, now is the time basically to hang on to those profits than to make more of them type thing. And that's where a lot of these things like positioning, sentiment, flow, they're just reminders of how players are positioned in this market. Early warning signals on both sides, on the long, on the bull and bear side. So that's where everything I do evolves kind of around that. And kind of to Ronchero made a great point in the room today. At the extremes, that's where big money is made, especially if you have the wherewithal to kind of hold through a trend and roll like Ronchero likes to do, and I still can't do. But at the extremes, that's where you get those snapback huge moves in the other direction, where on a risk-reward basis, you could get really, really paid. All those big moves, they all start off extremes in positioning on both sides. Yeah. You know, unfortunately, like Lucci was pointing out, on the bearish side, on the short side, it's just not like it was. It's not as easy as it was. When they used to catch long offsides positioning, you used to get these violent drawdowns where people would take hickeys, and that's what Lucci's talking about.
Bread and butter. That was my bread and butter.
Yeah, like I don't know, like we just don't see that anymore. We just don't see that anymore. But on the opposite side of things, getting long when everybody's looking for more downside, once that momentum turns, you got a lot of runway ahead of you. So that's where a lot of the things basically that I pay attention to, they all come down to that same premise.
Gotcha. And if anybody wants to learn more from Jay, he does teach all of this in his Flow Trader course, as well as, you can get Lucci and Ronch's course or a master course. So head over to steamroomtrading.com/education and check them out. So Lucci, another question for you from Business Contact. Actually, I've never even heard of this. In regards to time and sales, you mentioned black void orders on one of your series videos, but did not elaborate enough about it. Any added details?
I have a feeling, again, he might have rephrased it, black void. So basically there are times where there's nothing, there's no bids, and there's nothing, because your market maker now is so scared, as well as the rest of us. And that's the panic time that I was talking about with Jesus. Those are the times where stuff is moving so quickly, and there's so much panic out there. There's giant market orders just trying to get out. And the market maker is like, dude, I'm not going to take this. I'm not going to sit on the bid and suck this all up. So I'm going to pull everything. I'm going to pull everything, and we'll wait for all this stuff to slow down. And that's when the specialist is supposed to come in and stop the market. Obviously, that's why we have these halts and things like that. You'll see it in small cap land quite often. And, another way to to talk a little bit about this sort of black void is just when you see under a second a percentage move on the stock that is way bigger than normal. You know, that's when everybody starts freaking out. That's when things start to happen, and that's when that emotion really kicks in, and that's when you can see the waves of it just kind of moving in the tape.
Yeah.
And that's the world that
the margin selling, right? You get to that 2 o'clock hour, the margin selling and all that.
Yeah,
No, Luch, we are overdue for one of these episodes. Overdue
for sure. So maybe I'll get that black void again. If I get that black void again, hey,
sounds so spooky.
Shit ain't gonna be a black void anymore. It's gonna be filled with diamonds for me. You know what I mean?
So you guys have all kind of hit on something that we're actually getting a lot of questions on, which is a lot of the, I guess, the psychology of trading. You know, Lost One said, I'm struggling holding trades. Even when they go in my favor, I'm so used to scalping and I can't seem to break the habit leaving money on the table. And there was a few other too, where they're like, how do you deal with emotions after a bad trade? Or, you know, how do you just let it go and move on if you're wrong? So I'm not sure who wants to take this one. I know you guys all have unique perspectives on it, but
you got to realize, like, we're all older. You know what I'm saying? Like, all of us have over 20. Like, Jesus has almost. You got more than 20 years, right?
Yeah,
Jesus?
97. What year are we?
Yeah,
2020.
What year is it?
That's 20. That's 30 years, right? Yeah, that's 30 years. That's 30
years.
30 years. 30 years. I got close to 20. You know what I'm saying? So you're talking to dudes that it's just like, it's an on and off switch for us at the end of the day, in the sense of course, we still feel the emotion and we still feel all of it. It's just, we've seen so much, and not to say that we're better than it and we don't have them. That's not what I'm saying. But it is easier, and it does become easier with time. And
yeah, it becomes normal. Exactly. It happens way too much.
Yeah, and it doesn't take us that long to get over it. So if we fucked up, it takes us about an hour. You know what I mean? It takes us about an hour. For me, I go to the beach, I go here, and I'm good to go. You know what I mean? So you come back the next day and do what you got to do. You know, for those who have real issues with this, you need to build up your stomach tolerance, and that, of course, will take time. So that means adding on more size, what that feels like, getting used to what it feels like. And then a lot of people lose their confidence, though, too, during the emotion. So the emotion shakes their confidence, and then they just bail the trade, even though there's really no reason, or there was no reason for them to get out. So that's another issue and another hurdle you got to kind of get over. As far as ways to get there, I mean, shit. I've seen so many people try to do this now. We've seen so many character types and so many different emotional sets and behavioral issues and all this kind of stuff. Like, at this point, we can't answer your individual emotional issues, because, you know, everybody comes with their own set of conditions. Everybody comes with their own set, what's the word? How well they deal with risk. Everybody comes to the table with their past, with their own bullshit that they're trying to get through. Everybody comes, you know, with their own ideas of what the future is going to look like and all this kind of stuff. I can tell you right now, though, that all thoughts about the future and all thoughts about the past don't mean a motherfucking thing. And they will destroy you while you're in any trade. So you get in any trade and you think about that shit, you're fucked up. You're fucked up.
Yeah, and I think this is actually a good time on why we pulled in Chris Cady to the team to teach a lot of this too, from a trading psychology perspective. I mean, he's got 40 years of experience in the markets, and he really, you know, loves to help traders, you know, across the board understand how to handle a loss, you know, how to handle a win, hold through pain. And that's something that we do offer as well. You know, Chris and Charlie are both, I don't even know how they come up with half the shit that they do from a psych perspective. It blows my mind, but it's a really good course that we do offer for those that want to learn more on how to actually, you know, handle the trading psychology, you know, across the board.
Yeah, lots of drugs there, I think.
What, you don't want to do an ayahuasca trip there, Ronch, or what?
No, like I'm afraid of what would come spilling out of my dome. I do not wish to visit that dark corner. You know, I've been doing this since '94, and I think for me, what happened was, you know, I learned from calamity, right? Like where I got trapped and where I took my worst beating was after 9/11, right? After the towers came down, the market was closed for like 5 days. They opened it back up, and when they opened it back up, 2 years worth of gains were erased in that market quiet period. So I had to learn how do you protect from something you can't see coming, from that quote unquote black swan event. So I learned from that how to do that. And along the way, I also was taught, listen, when you have a good year and you make money, that shit has to come off of the table and it has to go to work in other places where you can't touch it and ruin it. And that's what, if I have a bad trade, I'm pissed off for 5 minutes and I'll stomp around and talk about how stupid I am. And then I'll come back to it and regroup and trade again. And I know that even if I have a bad trade, it doesn't matter because I've got 20 plus years worth of gains and other things working for me that this trade is not going to impact me regardless of how badly I fuck it up.
Yeah,
that's
definitely true.
Yeah, it's something that was really cool actually, Ronch, when we did the podcast was, you kind of explaining why sometimes you could be pretty hard on people in the room was, I don't want you to do what I did. I don't want you to fuck up what I fucked up. I don't want you to have that blow up. So if you're doing something stupid, I'm going to call your ass out because I care about you. Like, I want you to do good.
That shit ain't our job though. It's not our job to prevent y'all it ain't our job to prevent y'all from getting into these pitfalls, because sometimes it's that lesson that you need. So what are we?
Yeah.
Who am I to take that lesson away from you? You know what I'm saying? Of course, if we can, it's like you have your kids. You know what I'm saying? And when you have your kids, you don't want them to make the same mistake as you. But what are we talking about? A human life is a human life. What are you gonna do? You're gonna sit there in front and say, "Oh, hey, I did this before. You can't do this." The situation is completely different. You can't come in there.
Yeah, I mean, like, to your point too, Lucci, a lot of it too is it's trial and error on your own and making sure that you can have the mental fortitude to, like, get smoked and come back from it. Is another part that you need to be able to do this game.
I just looked at the chat too. We got some old school traders in here, man. Shout out to Eric Wood, man. What's going on, man? He put some of his cash in municipal bonds. You know what I mean? Just to avoid some of these these issues. You know what I mean? So
got that category too. Like, it's, I'm well spread out and well diversified now over all of these years, but it's not like, oh, you need to be diversified across your right? Like, it's not Wu-Tang Financial, but I gotta have stuff that I know that when I get out of bed in the morning and my feet hit the floor, there's money coming in, right? And I don't need to worry about the back end of it, and I don't want to touch some of that stuff because I can knock over the house of cards on my own. You know what I mean? I don't. I'll let it work and let somebody else handle a piece of it, a large piece of it, so I don't make a mess out of it. And
you got to know yourself out here, and a lot of times that means making mental hacks for yourself. That means knowing where you suck and knowing where you slip away. Like, if you put a bag of chips in front of me, or you put some cookies in front of me, and even though I'm on a strict diet and I've been good and all that stuff, if the shit is in front of me, I'm going to eat it all. I'm going to eat all of it. It could be 10 cookies. It could be 5. I'm going to have all of it. And I'm going to destroy my diet for the week or for the month or whatever. So I have to purposely not buy the shit when I go to the grocery store. I have to say no when people ask me to go out and get a drink. I have to do all these things if I want those results, okay? And there are sacrifices that you're going to have to make, and there are levels to this stuff. Obviously, you ain't out here trying to be Arnold Schwarzenegger, but at the same time, you know what I mean? I'm trying to beat these kids on the beach, and I'm trying to play some beach tennis. So I gotta get up there, man.
And you're an old man, and you gotta work harder, No, but you know what it is too, Lucci? It's the and Ronchero, like you were saying. Ideally, you want to get there. See, most younger traders, when you first come into the game, you know what they want. They want to go from A to Z like that. You know what I mean?
Yes.
And they rely on every penny they have in their account. You know what I mean? So that's why any loser hurts, because it's all they got. You know what I mean? They got a lot of money in their trading account. I mean, to Lucci's point, the longer you're in this game and you find consistency and you start putting money away in different things, you're going to care less about taking a loss, especially smaller losses, because big picture wise, to Ronchero's point, it doesn't really make a dent. But, a lot of the younger guys in this game, they're, what do they call them? YOLOing, or whatever the little kids use these days, right? They're YOLOing everything into one stock and this and that. So they're trying to hit it big quick. So that's the complete opposite of, obviously, what you're going to end up doing if you're still around in this game 10 years from now.
YOLOing. So you just don't want to go out there and buy SPY calls for 10 cents and hope they 100x right there.
No, but, I know the feeling too. Like, think about when you first got into the game. Every stock meant everything to you. Like, oh, I need a winner here. Just give me a winner right here. This winner means everything. In a grand scheme of things, that one stock means nothing, whether you win or lose, right? Big picture in your life, it means nothing. But because you have so much emotion and money at that time wrapped in to that bet,
you're attached to what the money means.
Exactly.
You're attached to what the money means. You're attached to what you could get. You're attached to where you want to be and all that kind of stuff. And then, it's a journey. It's a personal journey for every single.
Oh yeah. The game becomes a lot less stressful, and that's why I tell a lot of people who ask me this. People, especially younger traders, get in who rely on the money they make in the market to live. That's an added stress in this game you want to avoid.
That's why I created Lucci. That's why I created Lucci. Like, I blew up in, what was it? Actually, I made all that money in 2009. And then I took like this $500,000 loser. That was the biggest loss that I've ever taken. And I remember just sitting there and being like, it's like, I felt like I just took the cash, put it in a trash can, and lit it on fire. That was the first time that I ever felt like that. Because I'd never taken a loss that big. Obviously I had to gain that big, and everybody says, oh yeah, your losses are going to be bigger. And then you do it, and you're like, oh shit, this is what this feels like. And then I just took a break. And then I'm spending money, I'm investing in things, and I'm acting like a kid, and of course I'm just throwing money away. And you come back to the game and you're like, all right, if I'm going to do this for real, I need to make sure that I have income, I got some things coming in, and I have another business. And that way, when I come to the seat, I come to the seat as much unencumbered, so to speak, as possible. So that means I can just look at what this is without attaching all this other value and all this other expectation to it. And once you do that, you're fucked already. Your subconscious doesn't even.
Yep.
These guys, and I don't mind, like, you're somebody that's coming in and you like that, you like that excitement, or you like that let's hit the home run. I always say to myself, did I earn some profits from some profits that I'm okay just throwing out to the wind like confetti? Am I good with that? Did I earn that to myself? Did I earn the right for me to take a lotto? And if the answer is yes, I'll take it. And I know it's a coin toss, but I think that, to your point, Jay, that if you come in and it's something that you need because you're trying to live off of it, and you find yourself in a situation where you're like, I need this trade to work, you're chasing losses, you're desperate, you're putting yourself in a situation where you're just not going to make a rational decision, and more times than not, those guys just get wiped out.
Yeah, and that shit snowballs. It doesn't end there. It just keeps going, snowballs into a lot worse. But
yeah, there's tons of questions here, though. Jules, what's going on, girl? Long time, Jules. Alexander, there's tons of questions in here, man.
Yeah, so that's what I was going to dive in. This kind of ties into what you say here, Lucci, is what Alexander just asked. Like, Lucci, what if you don't have an option to earn money from other ways, and it's only with trading?
Alexander, there's always an option, son. You just don't want to listen to it. There's always an option, bro. Come on, man. If you had even a couple moments to just sit down without thinking about what you need to do in life or whatever, You know, there's a business there. There's some skill set that you have that you can provide to somebody for value, and that's your business. So you don't necessarily have to have a side business per se. You can have a day job. You can have, you know, there's ways to make it happen. There's ways to make it happen.
I mean, you could jar farts and sell them on OnlyFans. And
you know, hey, I wasn't gonna say that, you know, but now that he brought it up, Alexander, if OnlyFans is out there, you really don't have an excuse.
Show an ass cheek, show an kneecap, make a
bro.
couple shekels.
You really don't have an excuse.
I thought that's what you were gonna do, Jay. Weren't you and Ronch talking about starting up OnlyFans?
I contemplated.
Oh, if trading doesn't work out for you, you know, with this new regime, Jay, you have your calling. So we got a question here from Mario talking a little bit more about the trading side, getting away from the psychological, but well, I guess it's partially psychological. When do you decide to add to your winners, and how do you know that it makes sense to do so?
Well, again, what's the length of your trade, right? Like, you know how we do it in our long-term positions, right? We add to winning trades when, number one, we've got a good entry and we have enough time to do that. You know, the money goes into our pocket by rolling, right? We've got 3 different ways to roll, and when we learn how to roll, then we're in a situation where you stay in the trade, but the profit goes into your pocket. Like, that's a very simple concept, but very few people can do it because they change the time frame of their trade based on what's happening in front of them at the moment. They don't stick to to that particular plan. So it's not hard to do. You just need to know what to do, but you got to be able to execute it, because you're going to have ups and downs. That's how you're going to stay in a winner.
Yeah, and that kind of ties everything together of what you guys all do, right? And what you guys have been teaching and preaching for a long time is every little piece of this, right? Like your time frame and how you look at options and do it. Lucci, when he's looking at his tape, Jay looking at flow, like it all ties together to help you make those decisions on whether or not you want to add on, or if it is a winner and you think you're going to get there, or when you should stop out, which is all important for anybody. Lucci, do you have anything to add on to that?
Yeah, for me, it's tape. It's all tape when it comes down to the line of it. So, for example, even a day like today, when I was trying to catch the turns in the market. So this morning, Q's dropped, and then we had a huge bounce. And then into the afternoon, Q's dropped again, and then we had a huge bounce. But at those lows, before they're about to shift the tape in a completely other direction, they got to make sure everybody's on the wrong side of the trade. So I'll limp in, get out, limp in, get out. And then once I see it's ready to go, I'll lay into it, man. I'll lay into it by way more than my feeler trades, and then just keep adding as I know I'm okay. And then once I hit profit targets, just start getting the hell out. I need to do a better job in rolling and keeping the trade going, because in this type of tape, once you get those changes intraday, oftentimes they just keep fucking going, man. You looked at today, we had 40-50 move, 40-50 handles up and down all day today, and we did nothing. But there was still 40-50 handles on the futures to trade, and my bad, guys. I'm in a trading office, FYI. I mean, it gets loud in here. There's this dude getting his hair cut. Look at it. You see that? So at a trading office, remember, I used to that actually is PG, man. I used to be in an office where they would just bring in the strippers at 5 o'clock in the afternoon and be like, "Go."
You were launching midgets. Can we say midgets? Are we allowed to say midgets?
Little people. I don't know.
You were launching little people into garbage pails.
So we don't got much time left. We're gonna wrap here in a little bit, but Jason had a question which will lead us down some sort of rabbit hole. I already know this, but did you guys already go over how you met? I'd be interested to know how Lucci and Jesus found each other. I can answer that. Go listen to the podcasts on Market Misfits. There's a whole story around this. Even though Jay honestly doesn't really remember a whole lot of how they met. We got a drink and I met him. It's pretty funny. But all those are on episodes on the Market Misfits podcast. So the stories are pretty incredible. But the add-on question here is also how important was / is finding a community when you were coming up in the trading space?
Dude, I'll take this first here before my man hits the Clippers here. But it's everything for me. I mean, look at me. I'm here in a trading office that I built with my own freaking bare hands, and because I needed it. You know what I mean? I need it all the time. Like it's such a great thing to be able to meet people inside even a digital space, but then meet them physically. You know, Ronchero and I both went to Vegas recently. This was back in November, and we met a bunch of people in our chat room. And then here, this is what I built here in Puerto Rico, because this is my crew. Always, at any time, I need to be able to get what I need. If I can't get it myself, I need to be able to find some information. The information for me is everything. If I ain't got the information, or if I don't have access to it, I feel like I'm missing something. You know what I'm saying? So wherever I go, I need it. I need it. I'm hitting people up before. And I think it was like my father who put this into me, you know, as a kid, because I would always watch him roll around. He knew everybody wherever he went, you know, and that's just the way I got to be, man. So when my daughter grows up, if she's like, yo, Dad, I want to go to Brazil or something, I'll be like, yo, I'll call my boy. I'll call my peoples. They'll set you up right then and there. So for me, it's information. And information brings me the value. And the value could come in the form of money. It could come in the form of friendship. It could come in the form of so many other things. So community is everything to me. That's why we built all this.
Any add-on there, Ronch or Jay?
Yeah. Go ahead, Ron.
Yeah, I mean, I love the just in general. I mean, I came in and met Lucci and Jay just by being a member, and I had been trained by a market maker, and Lucci kind of hit me. He didn't hit me up, but this was in the early days of when the master course was going. And I kept getting these emails, and I was like, who the fuck is this Lucci guy? And why am I getting advertisements to go to a class to learn how to read freaking level 2? Like, what is possibly the benefit of reading level 2? And then they did like a scholarship. I wrote a letter in. I didn't get picked, but they encouraged me to go to join anyway. And if I didn't like it, I'd get my money back. So I jumped in there, and I was, you know, with what I learned from my market maker education, and then what I applied with the level 2 stuff from Lucci, there were a ton of light bulbs that went on. And that's when I came to Lucci and Charlie, and I was like, listen, I've got something that is applicable, that's actionable, that I think can work. And Lucci put, you know, some faith in me about how the LEAP strategy could work, and offer another avenue for other traders to get involved. So, you know, just being a part of the community and having a voice and being able to teach people what I know to help them is, I think like what Lucci's talking about. It's I get up every morning. I want to be here. I want to talk to all of the people in the Steam Room, to Lucci, to Jay, to you. It's what makes what we do you know, enjoyable. Nobody wants to do this by themselves, I don't think, unless you're a serious introvert that doesn't want to have any connection. I think community and connection is what keeps you going. It keeps you sane. It helps you be successful. It keeps you out of finding yourself in dark corners. You know what I mean? So it's this community is everything to me. Even when, you know, I'm having a day and I'm talking shit, right?
Yeah, definitely. To add on to that, I think what both of them just said. One would come out, you know, just with people around. There's nothing better, you know, sharing experiences with other people than just by yourself 100 times. But I think even more important to Lucci's point too, for younger people in the game, I think it quickens the learning curve. You know, you learn things that may be for you, may not be for you, certain different styles of trading, things you may not know about. And there's so many traders that have come up to me who have been Steam Room members and, you know, came in with a different style. They were finding success, but, you know, added rolling strategy they learned from Ronchero, or learning how to read the flow and tape, whatever they learned in addition to what they were doing, that kind of puts them over the hill in a sense, right? On your own, it can be done, but I think it quickens the learning curve when you're around other traders, especially traders who have some experience and have been doing this for a while. But I agree.
Awesome. Well, I think that's a good way for us to end this bad boy. Thank you guys again for hopping on. Again, this is our last week of our promotion for all of our educational courses. So if you guys want to learn from Lucci, Jay, and Ronchero, head over to steamroomtrading.com/education. Check out their courses. You won't regret it. And save over 30% from now until Monday. So again, thank you guys for joining us. Thank you all for all the questions. And Lucci, Jay, Ronch, we'll see you guys in the room tomorrow. Thanks again.
Thanks, Joe. Thanks,
Have a good
everybody.
night, everybody.
All right.